Tim Seymour, I don't know, but you probably know. And answer me this. Riddle me this, Seymour.
Okay.
Why didn't the markets take more of a gigantic hit on this tariff news?
Well, again, there are certain pieces of certain indices, especially industrial sides of this trade, that are actually pro-U.S. I mean, there's an element of this also. If the view is this is just a negotiation, and we'd already certainly priced a fair amount of pain. I think some of the response in the auto sector was just that. But there's a lot of dynamics here. If you look at growth type trades today, and if you look at semiconductors, they were quite weak. In fact, we're only about 1.5% above the lows before the market had a 10% rally. So I don't think that the markets were necessarily all that sanguine. I do think volatility is what concerns me more on some level, and some of the issues that we talked about are just dynamics in the market, which include liquidity doesn't seem to be as strong. People seem to be kind of sitting on the sidelines. There are certainly a case that some of the most crowded trades are ones that still could have some more room to go. So I just think the math is really complicated. We all know this. There's a lot of elements that are still unclear. We do know that trade representatives around the world are kind of getting together and figuring out what we can do. We start hearing, the EU has their anti-coercion instrument, and it sounds really scary, but really it's just another way of saying, hey, there's a lot that the EU can't do politically. There's a lot they can do as a trade bloc. That's really what they are. So if you think that we've only just begun, Karen Carpenter, by the way, great song. I know you're a big fan. I think this is a case where actually markets probably are not going to do a whole lot to the upside between at least now and April 2nd.
I think, Steve, you get my broader point, which is tariffs have been driving this market theoretically. That's what we're told. I'm not sure I totally believe that, but let's assume that is the case. We get this 25% announcement from the president. Yeah, the market was down today, but we didn't lose 4% on the S&P 500. The market was relative, and a VIX at 19.
I think Megan, classified it as, and you said is at the beginning of the end of the beginning. We don't know if they're ever going to even take place. So this could be. He can't say it's a negotiating tactic, because then it's not a negotiating tactic. So he's got to say that it's going to happen.
Also, what are you negotiating? I don't know.
Right. So I think no one has a problem with reciprocal taxes. 2.5 we're charging for European cars. They're charging us 10. No one has a problem with going 10-10. So I think there's a level of reciprocity is factored in. But there's also with the market sold off in a big way. We're coming in at a different entry point. So when you think about the correction the market's done, we're below the 200-day moving average. Again, that average is 57.58 or thereabouts, plus or minus 1. If you think that tariffs are going to take place, then you want to get into a cautionary stance. You don't know, but then you don't know how long they're going to last. So if Mary Barra goes in and
the head of GM.
The head of GM says to Donald Trump, President of the United States, we're going to build more plants. They're going to take 2 to 5 years or whatever the number is to build, but you have my word, we're going to build them. You're going to see that stock take off. I think he's going to say you have a carve out. So he's going to have a carve out for Ford. He's going to have a carve out for GM, as long as you do the right thing. So by the right thing is, I don't think this is the end of the auto production and manufacturing for the United States. EVs, when we have those mandates put in, Ford, just this last quarter, is losing $132,000 per EV vehicle that they're building. The whole year, they're losing between $5 and $6 billion.
And most are made in Mexico, by the way.
And most are made in Mexico this year. So that wasn't the end when you had this 2030, they had to be plug-in hybrids, 2035, no more gasoline vehicles. That wasn't the end of the auto industry, and tariffs will be a blip. I think you could still be successful owning autos.
So I agree with Steve and Tim. We don't really know. I wouldn't say that we have great clarity. We know we have an event coming up, but I don't think that will be the event that we know. Fine, and this is said and done. And April 2nd, we have clarity. I think the lack of clarity makes people uncomfortable, right? The market hates uncertainty way more than it hates bad news. But we don't have yet for sure the bad news. So we also have some fear of inflation. We're sort of half afraid of these tariffs. What if they really do come to pass? That could be highly inflationary. And if that's the case, then that's bad for the market, right? Bad for the economy. So trying to sort of figure out who are the winners and losers. Unclear because things may change. But if there's inflation, I think that's bad for the market more broadly.